Hey investors, welcome back. Today we're going to take a deep dive and analyze the Baltimore, Maryland real estate market. But in addition to analyzing the overall market, we're also going to take a deep dive into a specific actively listed property to check out its cash flows, its return on investment, and we're going to see if it actually makes sense to make an investment in this market. If this is your first time to the channel, hi, I'm Dave Hathaway. We discuss real estate, investing, and building wealth. So today we're actually going to look at the address 1011 Hunter Street, Unit B4, Baltimore, Maryland 21202. And I actually shared this address on our private Facebook group. So if you're not a member to that, definitely look down in the description. You can join our private Facebook group. But I shared this before it went under contract. So I'm going to analyze this specific property. And before we actually look at the specifics in what's driving the overall Baltimore market, I want to give you just a brief history on myself and the lens that I'm coming from to look at this market. So over the past 5 or 6 years, I built up a 50-unit portfolio in the Baltimore market. I've really liked it for the last 3 years. And then more recently, I've been selling off some properties, a bit hesitant to continue to purchase the amount of properties that I purchased because I don't quite see the same fundamentals in the properties that I'm looking at. And I'm a little bit worried that property values aren't going to continue to increase as they have been in the past 5 years since we've been investing. So that's one of the main reasons that I did want to take a really deep dive into this market and make sure, hey, as we continue to purchase properties, that I'm making the right decision. So let's take a look at what's driving the market of Baltimore. The current top 3 economic drivers are number 1, the Port of Baltimore, which is actually one of the busiest ports in all of the US and super important. Number 2, healthcare and life sciences. And number 3, education and research, which makes sense knowing that this is a big hub for Johns Hopkins University that contributes to the healthcare, the life science, that also contributes to the education and research. As for major Fortune 500 companies that are headquartered in Baltimore, they don't actually have any. They do have some larger companies like Under Armour, T. Rowe Price, and McCormick's and Company, but they do not actually have any Fortune 500 companies headquartered there in Baltimore, which is actually kind of surprising. As far as major sports teams, they got the Ravens and they have the Baltimore Orioles. And as far as international airports, they have BWI, which isn't in the city, but it's really close by. It's Baltimore Washington International Airport. So they do have an international airport. And other cool things that are going on in the city. The city is an older city, so it has a really cool architecture. Some of the buildings, the brickwork, the building design are super neat because they're over 100 years old. It actually has a really awesome inner harbor waterfront scene. So you got a lot of just great drivers that could make it a really awesome market. Now, going into the actual real-time market stats, Baltimore has a population of 556,000 people, but it's declining 1.17%, which I do not love. And if you look at the graph, it was increasing population up until 1950, 1960, and then it's been on a steady decline since. So that always worries me when a location has a population decline. And another reason why I definitely wanted to relook at the market again to make sure that it's an investable market. Unemployment is actually 3.8%, which is actually pretty surprising. That's really close to the national average. So totally fine there. Average salaries, according to ZipRecruiter, are $72,000, which is pretty high. That's great. Median sales price of properties are $217,000, which is super low. And recently, they've averaged 32 days on market, which isn't terrible. It's increased slightly, but if you're right around 30 days on market, totally fine. Not a hot market, but also not a cold market. Median rents are $1,500, and the price to rent ratio is 12. And those last 3 stats are what attracted me to the market in the first place. It's probably what attracts a lot of people to Baltimore. You can buy relatively affordable properties that rent pretty high, and that's why the price to rent ratio is 12. Anything under 15, you usually can cash flow pretty well. So looking at the overall statistics of the market, other than the population decline, which has always worried me, it has back when we started investing in Baltimore, and it still does now. But it just has so many upside potentials that I'm actually going to give the market a thumbs up. Moving on to the Google Street Test. If you look around on Google's maps, you can see this is just a normal city block. This is in the Mount Vernon area. And so Mount Vernon is a pretty decent place. There's not a lot of trash. There's dedicated parking here, which is great. It's off street. So I'm going to give the Google Streets View test a thumbs up. Moving on to the actual listing of this property, and we're pulling this all from Zillow. So this property is listed for $89,500. It is a 2-bedroom, 2-bathroom condo. It's 1,027 square feet, and it was built in 2005. And I'll just go ahead and say it. I normally hate condos. I normally hate them because of condo fees. If you look at different markets, you'll see, for instance, in like the Miami market, you'll see some condo fees that are like $2,000 per month. And so you act as a homeowner can't actually control those condo fees. So sometimes those have to get bumped up, whether it's deferred maintenance, whatever it is. And if the condo fee goes up, your correlated price of your condo goes down because people just look at the overall monthly payment. And with a higher condo fee, again, your monthly expenses go up. So I do kind of caution away from condos. This one piqued my interest due to location, due to price, and the condo fee was reasonable for me to go, let me take a peek at this. And just by a glance, I liked it. So if we're looking at the pictures, my rehab suggestions for this property, I would definitely fix the bifold doors. Bifold doors are one of my biggest pet peeves in rental properties because you get all sorts of work orders in regards to bifold doors. So if you are buying rental properties, please, if you can, change out those bifold doors. You'll thank me in the future. Change them over to French doors. French doors don't nearly get broken as much, or sliding doors at least. Just get away from bifold doors. And it appears they have some damaged doors in the property, so I'd change out the damaged door, obviously. I'd install a stainless steel microwave, an over-the-range microwave, and I might, even though you can probably get away with the colors in this apartment, it looks like the walls are in pretty good shape, but they did use pretty bold, dark colors. So I'd probably go with a little more neutral color. I often go with a light beige, a light tan. I use a color called Navajo Sand. A lot of people use the light gray color. I think the tan color just makes the places look a little bit more appealing. As far as a rehab budget on this property, it doesn't need a ton. You can keep most of the stuff that's there. I'm going to give it a very light rehab budget of $5K, just in case you want to paint the apartment a lighter color. You can do it in that $5K budget. So moving on to the cash flow analyzer. So this is where we look at the numbers, determine if this property makes financial sense for investors. So Zillow states that rents for this property should be at $1,995. Looking around some comps, that actually looks pretty accurate, especially with its own dedicated parking. Not all apartments have that, so that is a huge plus for people. Property taxes are $1,938, and so that's reasonable. And so if you go down in the cash flow analyzer, and if you guys don't have a cash flow analyzer yourself, you can go in the description of the video, you can click on the website, and you can download it for free. Feel free to use it. Let me know if you think we can make something better on this. But with the cash flow analyzer, it shows if you were to purchase this in all cash, you would make $926.40 or 11.46%. And that is pretty good if you're just doing an all cash purchase. Instead of having it your money in a money market or in savings account, I'd much rather make 11.46%. And this is with all your expenses taken out, including property management at 8%, including a vacancy rate at 10%. So it gets even better if you do a 7% 30-year fixed DSCR loan. Your cash flow would be at $449.24, which is lower than the cash flow of all cash, obviously, but your return on investment then jumps up to 22.23%. So really good numbers there. So this is a great cash flowing property. I think it would be a good long-term rental. I wouldn't expect the property to appreciate a ton because it is a condo, and I would be a little bit weary about condo fees. So if you're holding this as a rental property and down the road, let's say 4 or 5 years, you see them starting to bump that condo fee up, I would probably sell at that point. Also, I didn't mention, looking at those pictures, at the listing pictures, you do see there's some deferred maintenance inside the building. So I might just reach out to the condo association and just say, do you have a budget? Can I see your budget for deferred maintenance? Are you guys going to fix any of this stuff? Or the other super easy way is if you're having your agent or you're visiting the property and somebody's coming out of the building, just reach out to them and just say, hey, how do you like living in the building? What's going on with the interior of the building? Are they fixing it? Does it look like it's deteriorating? There's one thing you want to avoid is a one-time maintenance fee. Sometimes condo associations or condos will do a one-time maintenance fee if they have a huge expense that they don't have budgeted for, and it will mean that everybody in the whole condo will have to pay $5,000 one time to get the building up to snuff. So you want to kind of avoid that. $5K wouldn't be that bad. The numbers would still work here, even if you had a $5K payment one time. But again, I'm going to give the market an overall thumbs up. I'm going to give this property an overall thumbs up, as it is a huge cash flow. Anybody would love to get 22% on their money. So let's do a quick recap on the overall market and the property. Before we get to that, if you could definitely like the video, subscribe to the channel, we appreciate you very much. So overall, Baltimore, Maryland real estate market, we give it a thumbs up. The only thing that's concerning is that population decline. Moving on to the property itself, we found a great property. It cash flows 22%. Can't find that many markets, if any markets. That's why I invested there in the first place. So I guess I will continue to invest in this market, and I'll see you guys on the next episode.